Markets continue to climb the wall of worry, with the S&P up another 0.44% today, closing just under the big 6,700 strike at 6693.75. We mentioned in our previous several videos that the 6,700 strike was one of the next targets, and we certainly came close to hitting that today. Basically, a little teeny gap down early this morning and a big rally the rest of the session. You can see the 50 EMA highlighted by this red line on our chart has continued to hold even through this dip during FOMC, and continues to hold even after the dip right at the open. So market participants didn't waste any time as the new OPEX cycle is beginning, buying an immediate dip, and we see positioning coming in at higher and higher strikes. The 6,800 strike and the 7,000 strike are the next upcoming targets. However, we are entering our upper dealer cluster zone, and we do see larger gamma exposure concentrations at lower strikes. So we're starting to get a little bit extended here in this most recent rally that started at the beginning of the month, and we think the possibility for a pullback is increasing, especially with the potential for dealer selling pressure above the 6,700 strike. So that's something that we're watching. We're not expecting any kind of major pullback, but something in the 1 to 3% range. And if we just zoom out to our daily candlestick chart, you can see this is something that we mentioned in yesterday's video. The 50-day EMA is sitting just above the 6,400 level, and so approaching 6,700, we're approximately 300 points above that 50-day EMA. And I mentioned in yesterday's video, each time over the last several months that we have gotten extended that far above the 50-day EMA, we've seen a rejection somewhere in that 1 to 3% range. Flipping to our gamma exposure data graph, total gamma is sitting at 1.3 billion on the S&P, and this basically shows us that we are in a buy the dip environment. Positive gamma exposure, so we're on the right side of our zero line, positive gamma exposure with extremely low implied volatility. We're now at 15.5, so basically implied volatility has been lower only 15.5% of the time in the last year. So low implied volatility with positive gamma exposure results in a buy the dip environment. So any kind of dip in that 1 to 3% range would be a really juicy opportunity, in our opinion, to add long exposure in our portfolio.
Thanks, Anthony. Let's take a look at IWM following Friday's OPEX. You can see how important this 244 area is. Now, that's primarily because this is roughly where we closed today. But a persistent theme we've noted multiple times in recent days is that we've seen a lot of volume roughly in the 230 area. It's been persistent day in and day out, and this is daily volume. So the momentum is higher, that's for sure. And we have 250 as a target that stands out. And below, we have 240 that is now a support area. And to get anywhere close to this 230 number, we're going to need to see IWM lose 240 and stay below that. So there's at least a few levels there to watch. I do have questions about when we reach 250, to be honest. So looking at our historical GEX, IWM has come all the way back down, kind of hugging this zero line, not too far from a zero GEX picture on IWM. And when we look at our 3D model, which gets even more granular, we have 231 on October 17. But we do have 250 as the biggest cluster for September 30. So if we were to look at a hypothetical where this picture stayed the same for the next few days, which it may not, it may imply that we see a drop into this seasonally bearish week, which is typically down anyway, and then a rally into month end, followed by another pullback, which, in our view, would probably set up a run into year end.
Thanks, Sean. Next, let's take a look at the gold markets by taking a look at GLD. The gold ETF up another 1.73% today, closing just above 345. We've been noting the large gamma exposure at the 340 strike for the last several weeks. Of course, we hit that last week, and we've broken through that level today, now at the next largest GEX level at 345, and we're starting to see this stair-step pattern forming here on GLD. And a lot of times when we see this pattern, a continuation trend into these higher strikes over time ends up forming. So that's something we're watching very closely, potentially up to the 360 strike on GLD. And we continue to trade our weekly income strategy on GLD, which, by the way, you can take a look at for free by joining our community Discord. I'll put a link in the description below. Today, we actually locked in $2,690 profit on our short September 26th GLD 340 puts. We actually just rolled that last Friday, and so already in one day, we were able to lock in that gain, over $2,000 gain, closing those out at 86 cents, and we rolled out to the 345 puts also expiring this Friday. So we collected another $2.59 in premium, with our thesis being that GLD will continue trending towards these higher strikes. And if you're relatively new to GLD in particular, one of the catalysts on top of global demand for gold, but one of the more near-term catalyst was this multi-month consolidation that we saw between the 300 and the 320 strike. That broke out basically at the beginning of September, and a new uptrend has formed. And so we've been seeing gamma exposure over the last several months growing basically everywhere from 320 up to 350. And of course, more recently, we've seen the 340 to 350 strikes become most prominent. And so the last several trading sessions, this move up into 340 and beyond is really not a surprise, because the gamma exposure data has been pointing in that direction for several weeks now.
All right, let's switch over to the VIX, which completed the monthly option expiration last Wednesday. And let's just start out with a quick look at the 4-hour chart, which shows the VIX this morning came back and basically filled this gap that was left from Friday, tagged these various lines of theoretical support, the middle Keltner channel, the 15 EMA, the 9 SMA, and the whole moving average, and then started bouncing again. And so we have the setup on the smaller time frames to see a VIX spike potentially up to the 17 to 20 area. And I do find it interesting that we've seen the VIX 3 days in a row of green candles, with the VIX maintaining above the daily whole moving average. We definitely need to keep in the back of our minds, as we know that this week is seasonally bearish. We have Powell speaking tomorrow at 12:35 Eastern time. We also have a potential looming threat of a government shutdown, depending on what happens in Congress. So there are some risks out there that maybe are a little bit off the beaten path that could come back and cause this spike. Once again, likely that's a buying opportunity for stocks if we do see a pullback. But for those that are long currently, and we have long positions, we do want to be aware of that risk.
Thanks, Sean. Next, let's take a look at a couple of names that we are actively trading. We'll start off with Nvidia, up 3.93% today, closing at 183.61. We actually exited our Nvidia positions at the end of the day during Thursday's trading session, and we're looking for a potential pullback. Well, that doesn't seem to be occurring, as Nvidia is right back up to recent highs, and actually looks to be threatening this resistance level here around the 184 to 185 level. Gamma exposure is also positively skewed from 180 up to 200. We've mentioned this in several of our recent videos, the possibility for a move towards that 200 level in the coming weeks and months, and it appears that Nvidia is almost ready to make that potential breakout. The largest volume today was actually at the 185 strike, over 600,000 contracts traded at that 185 strike. But even if we go all the way up here to the 200 strike, over 200,000 contracts traded at that strike alone today. So a lot of volume coming in Nvidia at these outlier strikes. It does look like market participants are expecting a breakout. And this is something that we're considering adding to our portfolio to maybe catch an outsized gain towards the end of this OPEX cycle, maybe into the October 17th expiration specifically, something like an out-of-the-money call debit spread, the 190 to 200 call debit spread, for a more speculative position if momentum really kicks in gear over the next couple of weeks on Nvidia. By the way, you can track our trades in real time by becoming a member at geeksoffinance.com. Link in the description below.
All right, let's take a look at snow. We're barely even to the beginning of fall, but this is a stock that we want to take a look at. And in fact, on September 5, we actually placed a trade in our portfolio. And at that time, we saw GEX at the 250 and 260 area that looked interesting. And so we sold a put credit spread for 480. So let's flip over to the current picture, which is still showing that meaningful GEX at 250 and 260, especially 250. And I like the technical setup. We've seen a bounce out of that 220 area for the last few days. We're right at the doorstep of this big GEX cluster at 230, and it seems like if we can get above 230, that will open the door to reaching 250. The outlook for snow, it even looks good in the shorter term. I noticed this Friday we have a big GEX cluster at 235 and even at 237.50. So it's definitely possible that we see snow move up this week, and a lot of the GEX at 250 is October 17, which is where we have our expiration. We view pullbacks as a buying opportunity, and we think the setup is there to reach those higher GEX targets.
And guys, don't forget, you can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We have a few spots remaining, but this promotion is going to be ending soon as September is wrapping up, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies, and you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.